Good afternoon. This is Sean Golding with Golding and Golding, here to discuss some of the proposed foreign trust and gift regulations. They came out the first week of May. Some good, some bad, but overall, it looks like the IRS is working toward trying to make it a bit easier for taxpayers who receive large foreign gifts, trust distributions, inheritances, things like that. So, in general, when a taxpayer receives a gift from a foreign person, gift includes inheritance, they have to report this on a Form 3520. In addition, when a person has ownership of a foreign trust or receives distributions from a foreign trust, they have to report on Form 3520 and 3520A. Now, with foreign trust distribution and ownership reporting, it can get infinitely complicated because what's the definition of a trust, right, or a foreign trust? Um, Oftentimes, items such as foreign pension plans and retirement schemes are considered trusts per se from like a technical standpoint, and so then you have to determine, well, is this foreign retirement plan a grantor trust? Is it not? Do I have to report it? Is there an exception or an exclusion? Let's kind of work through here. Let's start with the gifts because this is common. In a typical situation, a U.S. person receives a large foreign gift or an inheritance from a foreign person. They have to report it on Form 3520. So first is that there's going to be a cost of living adjustment for the $100,000. So typically what happens is there's different thresholds to determine whether a person has to report the foreign gift or inheritance or not. Okay. When entities are involved, if it's a gift from an entity, it's a much smaller threshold, but it adjusts each year. And so it's not the same amount. When it comes to gifts from individuals, it's been $100,000 for many years now. And so based on these proposed regulations, that $100,000 will adjust, which means there's a higher threshold before the person has to report. The other rules essentially stay the same. The IRS also is proposing that possibly additional information about the transferor, the person giving the gift, may be required. Now, when it comes to individuals who give gifts, typically the reporting is only the date, the amount, and what it was. So January 4th, inheritance from foreign parent, $400,000, right? But the IRS is saying, oh, we might need additional information. They think the person receiving the gift is the best person to provide that information, right? Why do they want to do the legwork? And the idea is they want to be able to confirm it's a gift and it's not something else. Currently, when a person receives a gift from a foreign entity, there is some additional reporting required, and so it seems like the IRS is saying, hey, individuals should have to do that as well. In addition, there is some limitations for dual status reporting so that depending on whether or not the person is considered a dual status taxpayer for the portion of the year that they're not considered a U.S. person, they're filing 1040 NR, then some of these other requirements they would have to do won't need to be completed. When it comes to foreign trust proposals, some of them to keep in mind is migrations to domestic trust, right? So if a foreign trust is going to transfer into a domestic trust, then that's going to be considered a distribution, not the best outcome, right? So if it's just a transfer, let's say, from a foreign trust to a domestic trust, well, that's going to be considered a distribution depending on whether it's UNI or DNI and the throwback rule and 4790 accumulation distributions. That can become something complicated. In addition, there is a proposal for limited U.S. agent status. So if there's no U.S. agent, depending on whether certain transfer statements or whatnot were issued, the taxpayer can become subject to tax on the entire distribution, but the entire distribution may not be taxable. So what they're saying is if the foreign trustee gives a U.S. person limited agent status so that the IRS can follow up and kind of audit or work through, examine through the U.S. agent, then it may limit some of the harsh tax consequences for these types of distributions. And finally, another important one is that it's solidifying the Revenue Procedure 2020-17 as well as some of the other ones. I think it's 9734, which basically together says, hey, you have to report foreign trusts and gifts and things like that, but when it comes to foreign trusts specifically, there might be some exceptions or exclusions, limitations, depending. Is it a tax-deferred retirement plan, tax-deferred non-retirement plan? The idea is that back in the day, when primarily it would be things like Canadian RRSPs, there's a specific revenue procedure. For example, I think it's 2014-55, which says the RRSP, which is technically a trust, even though it's used for retirement, has to be reported for FBAR and Form 8938, but you don't have to report it for Form 3520, 3520A. It's not like the IRS is going to promulgate rules for each and every type of potential foreign retirement plan or pension in every country. So they came up with these more general procedures are a bit ambiguous, but they can help taxpayers, especially in situations when it's things like SIPs. The IRS is just saying, hey, let's codify it. Let's make it more something everyone can rely on. For taxpayers who are out of compliance for their foreign trust, gift, and inheritance reporting, there's various options you have to get into compliance. If you're willful, you have the voluntary disclosure program. If you're non-willful, there's various non-willful programs available. The delinquency procedures, streamlined procedures, and reasonable cause. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter and something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.